There's a lending move called a securities-backed line of credit, an SBLOC, that lets someone sitting on a stock portfolio pull out $400,000 in real spending cash without selling a single share, and without paying a penny of capital gains tax, completely legally. And your bank will never walk you through it, because the version they sell you at the counter is a plain personal loan, at a plain rate, with plain strings attached. Here's the problem most people don't even know they have. Say you've spent 20 years building a stock portfolio. It's worth $1 million now. You want to buy a house, cover a tuition bill, start a business. The obvious move is to sell some stock. But the second you sell, the IRS taxes the gain, sometimes 15, sometimes 20% gone before it ever reaches your pocket. Most people just accept that. They think that's the toll for turning wealth into cash. It isn't. Not if you know where to look. An SBLOC is a line of credit, but instead of a house or a car backing it, your investment account backs it. The bank looks at your portfolio, stocks, bonds, funds, and says, "We'll lend against that, and you keep every share exactly where it is." No selling, no taxable event. The stock stays invested, still growing, still paying dividends, while the cash sitting on top of it becomes spendable. Think of it like a home equity line, except the house is a brokerage account, and it can be arranged in days, not weeks. Here's how the mechanics actually play out. Say your portfolio is worth $1 million. Most SBLOC lenders will extend credit up to 50 to 70% of that value. Call it $600,000 available. You draw $400,000 of it to buy a rental property. You didn't sell anything, so there's no capital gains tax on that $400,000, $0. Your portfolio keeps compounding in the market, untouched. You pay interest on the loan, often close to what a mortgage would cost, sometimes less. And here's where it gets interesting. Many SBLOC lenders don't require any fixed monthly payment schedule at all. Interest can accrue or be paid from dividends the portfolio itself throws off. The debt just sits there, quietly serviced by money the account was already generating. Now, who's actually doing this? Overwhelmingly, it's people advisors call high net worth, business owners, executives holding company stock, families who inherited a portfolio and don't want to disturb it. Private banks pitch SBLOCs aggressively to those clients because the bank earns interest without the client ever triggering a taxable sale. But the product itself isn't restricted to the ultra-wealthy. Any brokerage with a meaningful account, Schwab, Fidelity, Morgan Stanley, will set one up for a regular investor. It's just never advertised on the regular menu, because a bank makes far more money quietly steering everyday customers toward a traditional loan than it does explaining a strategy that keeps your money invested and untaxed. But here's the catch, and it's a real one. An SBLOC is tied to the market value of your portfolio. If stocks drop sharply, the lender can issue a collateral call, demanding you deposit more securities or cash fast, or they'll sell your holdings themselves to cover the loan. That's forced selling at the worst possible moment, and it's the one risk advisors downplay. The IRS is fine with this. There's no rule against it, no gray area, no audit trigger. It's the market risk, not the tax code, that makes this a tool for people who won't panic if their account dips. So remember that $400,000, tax-free, pulled straight out of a portfolio that never stopped growing. That's the number the SBLOC quietly delivers every single year to people who understand the difference between selling wealth and borrowing against it. Your bank has this product sitting in a back office folder right now, but it will only walk in with the regular loan paperwork unless you ask by name. There's a related move that lets you eventually erase the capital gains tax on that stock entirely, permanently, using a rule about what happens to your assets the moment you die, and that one's even harder to believe. That's the next file.